Good morning, traders. I hope everybody hears me okay. I'm back after a small 2 weeks of a break, back in the saddle, excited to see the markets have continued to move, and we are not in those summer lulls that may happen sometimes in August. It's actually not only moving, but it's moving quite a lot. So we'll have a lot to go through over the course of the week. It's a relatively quiet start on the data front this week, but it's going to go in crescendo. And at the end of the week, a lot will be happening. So thank you for joining me. Let's take a look at what's going on in these markets and what has been said and done over the weekend. First of all, let's go over to Japan. We've seen the yen move a lot over the Asian session once more. Reminds me really of my last day in the office on 2 weeks ago, when we had that famous Monday where dollar yen cracked out a number of big figures, and we saw exactly the same thing happening this morning. Looks like we have a couple of things driving this. One is that globally, the dollar is still under the cosh, still suffering, still pretty offered at the start of this week, the Jackson Hole week, let's call it. And that is one thing. But there has been a couple of other developments is a big word, but things happening over the course of the past week. And if you look at these, for instance, I usually never look at those CFTC positions, but so much has been written about what's going on in the yen, and here, this one in particular. Speculative positions in the yen, and also read in the media that the hedge funds finally, after 4 years of being short yen, have gone long yen for the first time. That is one of the drivers why, of course, the yen is remaining strong. People are still expecting the Bank of Japan to continue normalizing in some way or shape. But this is now has now been reversed. Also, read a lot of articles saying that the carry trades have more or less been unwound, so that is keeping the yen on a strong footing. To me, that's very interesting right now, if that would be the case, because it's a big swing in mentality in the market, in expectations. Read a few of the big funds; they still expect the Bank of Japan to continue to normalize, and so they are still selling JGBs as well. But there's been something else in which could have been driving this, and it's M&A, merger and acquisition. It is said that, let me just take the article back, that 7-Eleven, the Japanese retail group, 7-Eleven is to mull a takeover offer from Canada's Alimentation Couche-Tard, which is one of the big retail and convenience store giants in Canada. And I have to know that 7-Eleven is valued at about, the market cap is about $31.5 billion, and overnight as well, this stock has been absolutely rising, exponentially. Well, it picked up like 23% or so, also higher today. We don't know any details about the deal, but if you take into account that we could be talking about the biggest takeover ever of a Japanese retail company by a foreign company, I think some may have been speculating that this may have to do with it, and that there may be FX to be done on the back of it. That would be a big deal. Quite a sizable deal, yeah. I reckon that some of the moves that we've seen in Asia also have to do with this. So the week is going to go, as I said, in crescendo, also for Japan, because on the 23rd, and that is on the same day as we get to hear from Powell in Jackson Hole, we will hear from Ueda, who is slated to talk in Parliament about monetary policy, about the outlook, about what the plans may be for potentially further reductions in the JGB program, which they outlined already, but you never know what Ueda may have to add to the debates. I just want to come back on a little bit on this hedge fund and speculative going long yen. It is fairly new as well, because we know that since really Corona came on and we got to see Abenomics, the market has, in some way or form, mostly ran short yen positions, and a change. This is quite a big change, and I'm going to leave this in the middle, but I do have a thought that the market may be a little bit optimistic on what the Bank of Japan may continue to do. They have started to normalize. They did did a bit of a surprise. We had those interventions, but Bank of Japan is not really historically a central bank that goes aggressive on on any tightening cycle. Actually, I mean, historically, I think last time was in the 80s when when they really raised rates. So most of us don't even know what it means when the Bank of Japan raises rates, but it will keep the market on its toes. I guess until Friday, until Jackson Hole, until Ueda. We will have heard from Ueda before Powell, so we will have a pretty decent idea about what Ueda wants to do, or what it doesn't want to do further in the future. Also, we had a bit of news. The candidates to replace Kishida at the helm of the LDP are now coming forward. Kobayashi, the youngest candidate, came forward and said that he would be potentially putting in that in the ring for becoming the next LDP leader. The vote for this LDP leadership should take place on the 27th of September. So if you want to make a note of that in your diaries, the 27th of September, we will start to have an idea about who is going to replace Kishida. Knowing the Japanese tradition, Kobayashi, 49 years old, is considered to be a youngster. It may not be his time yet to come, but he is, for what it's worth right now, he's a pretty expansionary on the fiscal policy. So he's not the one that is going to dramatically reduce deficits also in Japan. That for what the main line of his approach would be. Okay, moving on. Over the weekend and starting today is the DNC, the Democratic National Congress in Chicago, where we are expecting to see a big Kamala fest going on. We have to note that, and I was reading back the polls end of last week, the polls are starting to show Kamala taking some sort of a lead in some areas versus Donald Trump. So that brings us back also to the markets, where we have seen this Trump trade, which was very much a steepening of the curve trade and so on and so forth, and starting to be screwed back a little bit as well, especially the long end versus the short end. That steepening process has been undone for parts, which in turn may also have been weighing a bit on the dollar as well over the past week. This rebalancing of expectations in the polls, without wanting to front run anything specific, it may just have helped to unwind some of those Trump trades, Trump 2.0 trades, and that is also what the market is relatively trading right now, this unwind of or this rebalancing of expectations. So we are going to expect a lot of headlines out of this DNC as well. And keep an eye on when, I think it's is it 4 days convention that I guess we will have quite a few polls coming out in the meantime as well, showing us how Kamala is doing versus Trump. On the central bank front, we had Daly and Goolsbee speaking. So Daly said that it is probably time to consider adjusting the borrowing cost. So leaving the door open to a cut in September, but adding that it is likely going to be a prudent process. So I don't think that from her side we should expect a very strong push for like 50 BPs or so, which is what the market is hoping for, I think, at the end of the week in Jackson Hole, that Powell would leave the door open to a 50 BP cut. Personally, knowing Powell, seeing what he done, he will leave the door wide open to a cut. Will he give the market a 50 BPs potential cut? I am not so sure about this right here and now. We've seen the data pointing to a cut. We have seen the data slowing down. We have seen that employment report also coming in weaker. But then we've had a couple of other reports coming in still relatively okay. Like, for instance, on Friday, the Michigan, where we had a standstill in the expectations for the inflation data. And the customer, even though the current conditions came in a bit lower, the sentiment and the expectations were a bit higher than the prior numbers. So the consumer still hasn't really given up on the US and in the US front. So I would suspect that that may be one factor where the dollar may not yet completely give up the ghost and collapse further. It's really going to come from the numbers. We will have PMI data as well later on this week. So if those numbers confirm the weaker reading, then the dollar will probably get another slap into the Jackson Hole. But what the market is mainly going to wait for is that what Powell has been saying, and Goolsbee, by the way, who really is a weather vane. I really don't attach too much importance to what he's really saying all the time, but he said that September may not even be a done thing. Hold on one second. I'm just oh, okay. May not even be a done thing, but then prior he was really talking bearish and he just doesn't know. I think he just likes to speak in front of cameras and that's it. What else? Oh, on while we're on this calendar, on Wednesday we will also have the first preliminary review of the payroll data through March of this year. So it's an annual kind of review, but you know, the Bureau for Labor Statistics, they come up with those like quarterly. Well, I mean, this one is going to be for March, up to March, but we know that sometimes over the course of the year they can come up with like very big revisions. Remember last year and the one we had earlier this year, the revision was actually for better payroll numbers than what the market was expecting, where the private reports were very much completely an opposite of what BLS came up with. But that is coming out on Wednesday, so that's one for the diaries as well. And that's about it for the US. Moving over to the Middle East, we had a US ceasefire proposal on the table, but Hamas has been rejecting it. Iran is still saying that it is important to get a ceasefire in Gaza, but once the parties are on around the table or on the phone, it doesn't seem that obvious. And I think for markets, that is also what is keeping not necessarily the dollar under the cush, but stuff like gold relatively well supported. I'll have a look at what's happening there in the metals in a bit. In Europe, I read a few things that there's an expectation to see quite a few European auctions this week. We will have also a in the US side, the short end will be dominant this week, but we will have like a smaller 20 and 30 year as well offering over the course of the week. That is going to be for the 21st and the 22nd, but they are relatively small ones. We do have to look out, especially I would say for the 30 year, because that gives us a good idea about how the long termers think about everything that's going on in the markets right now, especially after that bit of a rebalancing that we saw from away from the Trump 2.0 trade. Okay, and looking at the calendar, then, as I said, read some articles that we will have over the course of the week some more European bond auctions as well. Some are expecting increased amounts, so keep an eye on what that may do to European rates and therefore do to some of the European crosses. Okay, all in all, we've seen a very mixed picture in the European crosses. We have seen a higher euro dollar, but in turn we have seen the crosses really in the eurozone. If you against the euro, if you take away stuff like the yen, for instance, because yen is really living its own life, we have seen them gradually come back, and I would say it's relatively normal that that happened, because if we look at all the European data coming out, they are still if not bad, lukewarm. Let's call them lukewarm. But I still not a huge fan of the euro in global crosses, unless, of course, we see another round of big risk-off moves, and that has been really proven over the course of the past 2-3 weeks, when we get like really big risk-off. The euro versus like commodity currencies, for instance, tends to really ramp higher. All right. What's next on the calendar? We do have the RBA minutes out next night. China rates are now expected to be kept on hold after them lowering them last month. They are expected to be kept on hold now. RBA minutes, we know that Bullock was still relatively hawkish on over the past meeting, so that we will see what the minutes have to say exactly in the in details. We will have PPI data out. I suppose that these are the final numbers. I'm still catching up on stuff, so these are the final numbers. Jordan is speaking tomorrow, but he's out of the door, so I'm not sure if the market is really going to pay too much attention to him. But whatever he may say about FX is still going to be taken up by the market, especially if S&P would give us a hint that they think that the Swiss franc has strengthened a bit too much in sympathy with the yen, for instance. So that's one that we will lend an interested ear to as well. Oh yeah, we do have a few Fed speakers as well. We have Ueda later today. Tomorrow we will have Bostich bar as well. So there's still going to be a bit of a central bank avalanche, especially from the Fed, before we hear from Powell in the hole. For those watching emerging markets, Mexican retail sales tomorrow. The MEX is a bit of a strange one, especially now that it's kind of accepted that most of the carry trades have been unwound. We may go into an interesting period for the MEX, but I'd rather would like to see what AMLO and Scheinbaum are going to do from here, because that may become perhaps a bit of a bigger driver now that carry trades have been kind of unwound. Big one for the Canada tomorrow, and we will have a look. I'll have a look at the dollar CAD in a little while. We have CPI tomorrow. The expectations are after a mildly dovish Canadian, Maclean, Bank of Canada, and everything, they are still relatively dovish. If we would see a further reduction here in the CPI data, Canada may be one that is moving a bit come tomorrow, okay? And then we're going to move into midweek. Into midweek, we will have well, a bit of housing data here, a very light program on the US side, but we will have the FOMC minutes coming out on Wednesday as well. And then moving over to Thursday, and that's where we are, where I suspect that the market is probably going to find some kind of an elan ahead of what's going to happen in Jackson Hole, and it's PMI day on Thursday. We have seen that the data have been market movers, so I think on Thursday we should all be well rested and awake, because there we're going to go into 2 days of potentially pretty steep moves in the currencies. Okay, so we have PMIs globally. We will have Mexican CPI as well. The PMIs in the US as well. The claims came out a bit better last week, but I say watch more the PMIs than claims, unless those claims are really starting to take a real direction. All right. For those watching commodity currencies, we will have the Kiwi retail sales. It's probably going to be a mover, because after what the RBNZ did last week, the Kiwi now recovered it just because of the dollar, and because of, let's face it, the Kiwi and the New Zealand dollar is still a 5.25% currency. So it's data who are going to tell us what to expect from the New Zealand dollar, I reckon. We will have the Japanese CPI then coming out on Friday. I remind you that we will have, I think it's 9:30 or 10:30 Tokyo time, Ueda speaking in Parliament. And then we will, of course, have the Jackson Hole symposium, which will be really overshadowing everything else on come Friday afternoon. We do have Canadian retail sales as well, but I do think that the whole market is going to just monitor what Powell has to say, whether he gives us those 50 pp's or not. All right. Yes, Gavin. We do have a slice of Bailey as well. And speaking about Bailey and Bank of England and the pound, and I can straight away go over to what is happening on the currencies. Sterling has been performing all right. We had this really big setback in all things risk. Just before I left and when I left, we had a slice of smalls. Well, a bit weaker data. If I recall, this is also the was it the employment report? Refresh my mind. That came out. Then I think it may have been when I was just out. And then Sterling printed the low. I did say before leaving that I was going to monitor, but then I was off. I didn't really do much. Going to monitor the cable in the low 126s. It did hold, and since then, Sterling has been a real outperformer in major land, in dollar, euro, sterling land. Okay, the three main currencies, and it does look to me like unless we get like weak data somewhere this week out of sterling, it does look like the market has its eyes set on going for a retest of the 130, potentially those highs again starting the week. Okay. We are trading around this 78.6, around 129.60 right here and now. Fundamentally, we may stall here, but the way the market is looking at at the dollar, the way the market is looking at the majors, the way the market is looking at the pound right now, you see we had this first leg higher, came for a retest of the 128 and did the next leg higher. The market is again relatively positive towards sterling, right? And we find it back in a cross such as euro sterling. We had this move higher. I also said like when it started to break back above, I was a bit short back above 84, 60. I covered my shorts, and then I did try it again around here. And actually got stopped on a trailer here just before we had this little move back higher on the back of some more euro covering, because the euro has been doing well as well for parts of last week. But again, we are seeing this move lower. I'm not sure if this channel is still valid, because we have been crossing that line pretty often, and it doesn't look like, if you look at it on a daily basis, that is 85, 60, 65 is too important, but I still would not completely rule it out, because it's a bit of a fib level here as well. But we are trading. The sterling is trading still trading on a positive note, okay? And we saw the GDP data out last week, and people said like, oh yeah, it's a lukewarm report. I think it's still, if you compare it to Europe, for instance, it's still a relatively positive report, and I would say on the whole, it's not overly surprising that the sterling is doing well. So um, fast forward to perhaps the end of the week, if we don't see any disaster on the PMIs, if we don't get anything like uber hawkish on from Powell, whether it be cable or a sterling cross, for instance, I wouldn't rule out that the sterling is actually going to continue to do relatively well. If we get a move break back down below 85, the figure 84.90 euro sterling, we see this level has been traded a good few times. We could go actually back to test the lows, and I'm really not excluding this, because the sterling is, to me, showing pretty good resilience. Now, let me, before I move over to the rest of the currencies, Ali, good morning, good afternoon. Reading through what you are saying, are we on the verge of a major, on the verge of a dollar break? Aussie, yeah, I'm going to look at this. Market is expecting aggressive rate cuts, yes. Now, against fundamentals, weak economy is not that weak, not bad. Okay, market expectation. I'm in between two thoughts. Yeah, you're in between two thoughts. I think a lot of people are. A lot of people trying to trade, and with some form of success, obviously, trying to trade the dollar from the short side. We have to know that there is. You have to look at other currency pairs when you trade the markets. But once the dollar takes over, it being the biggest market of everything, right? The bond market is the biggest market. The equity market is the biggest market. The dollar is the biggest FX market. Once the dollar gets on the move, it tends to take over from considerations what we see in other currencies in other countries, at least temporarily. And this is what the market now is now trading: the expectations of the Fed starting a cutting cycle, also the expectations of what the people saw for sleeping numbers. And we are still in a soft landing scenario, very much so. And that has been proven by the equity markets seeing that revival. But also when you look at gently slipping data. Also, Powell, don't forget that he told us that they would respond to job market moves, and we did have a weaker report, all right? Not going to say that the 100 and whatever, 114 or so job creations is weak, but we saw the unemployment rate tick up from 4.1 to 4.3%. It has lit some lights or some, not going to say red alerts, but at least yellowy flags on Powell's desk, and then the market turns around. So if it's still a soft landing scenario, as we've seen from other data, for instance, the retail sales weren't that bad. The consumer is still there, so they're still positive. But then you go in pure correlations, the dollar tends to weaken slightly, and especially against stuff like the better risk currencies. Okay, we've seen a good revival of the Aussie dollar. We've seen a revival despite RBNZ cutting the rates of the Kiwi. We've seen a good sterling. Don't forget that those currencies are risk-related currencies. We've also seen stuff like, for instance, sterling Swiss, euro Swiss coming back better bit, because the Swiss is also related to risk. So those kind of correlations are the kind of correlations that the market tends to trade. Now, where you say like I'm in between two seats, I kind of agree with you, because I'm somewhere in between those two seats coming back from my break as well. Has the dollar gone far enough? Because if we don't get weaker data from here, and if Powell says like, well, guys, don't go and hope for 50 BPs cut in September, on Friday there might be a pretty strong repricing as well of the dollar. And that is what we have seen prior as well. You've seen those big equity moves higher, correlations follow for a while, and then they break down, and the dollar makes a comeback. I am not going to rule this out, okay? Right. So you don't understand the CAD move. I was going to look at the CAD as well, because we are on interesting levels here. But first of all, euro. And so in line with other dollar pairs, the euro has gone for a bit of a break higher. Slightly overshot the 78.6, and now we are back there. But the interesting one is on the better retail sales. That's the retail sales I trust last week. It came back to test the break line and bounced again. So technically speaking, this is still supporting a break. All right. So, and for this break to hold, we are going to have to let the week go on a little bit. And this is a daily chart, so we have to really let the week go on a bit. The big level for me is going to be 109.3550. Okay, by the time we can get back there, we probably this line is probably going to be sub 109. So 109.3550 is going to be a very, very big level for the euro on the downside. Top side, assuming that we get more weak data out of the US, etc., blah blah blah, could be on Thursday, or if the market really sticks its teeth into a much weaker dollar. We could go back up to perhaps 111 at some stage. Again, euro, I'm still not a huge fan, because when I look at euro crosses to make this my favorite pair, where I would make this perhaps a favorite pair is the other way around. If we get rejections and if we get failures. Because I think if we get a move back down below 109.3550, I think this whole thing could be just over, and then we may have to look at lower highs and get back down. But that's music for later this week. I think right here and now the market still is pretty firmly on this. I want to trade a bit of a weaker dollar, but really, to me, right now, I'm not going to initiate anything fresh to the short side of the dollar. I prefer to wait, and especially not against the euro. Interesting development on the dollar yen when I was off. We had this very big reaction, you know, on that famous Monday before I left, and then we had like a really big spike higher. To retest, even went back a bit above the break line, but big rejection around the 38.2 of the move lower. Okay, This now is going to be a big level, anywhere between 148.75 and 149, call it a half. And we have to look at these kind of wider pictures for the yen because the volatility is that high. Anywhere between 148.75 or call it 149, 149.5, we are going to have to be very careful. And especially, I would say, into the latter part of the week, because we will hear from Ueda, we will get the Japanese CPI, and we will have Powell. Okay, so if ever at that time of the week we trade around here for dollar yen, watch out. If we do get a break and the market is long yen, as we've seen some of these reports, I wouldn't rule out a move back up to 152. Okay, as a matter of fact, I reckon, not I reckon, I am thinking personally that this move that we've seen here is kind of enough for now, unless we get fresh data and unless we get confirmation that Ueda wants to hike further and Powell leaves the door open to a 50 BP. Yes, we can get back to 144.5, 145. Why not? It's volatile enough. But if ever this week we will see a move back, we should see a move back down, or we would see a move back down rather, down to those lows here, I'm going to be very tempted, perhaps not specifically in cash, but I will be tempted to perhaps tip my toe in some form of a short yen. Could be through options, could be perhaps a cross rather than dollar yen somewhere. And I am thinking of something as well in the sterling yen area. I haven't put the charts on there yet because I'm still just back from my break. But anywhere, if we see moves back down to this kind of this whole zone here, traffic area, to the underside of the traffic area, somewhere around 154, 155, 180, 485, I may get tempted. Canadian dollar, I think it does look relatively simple. Again, I'm on daily charts. Yeah, when I come back from a break, I have looked at the shorter end, but when I come back from a break, I like to look at the somewhere the bigger picture, and we could take this, but as well. Look, we are on supports here in the dollar cat, 136.60, 136.5. Here we are on supports. Okay, in the dollar cat, Ali, and it's been an on and off correlation with oils in a way. It has come down. We had this big move in the Canadian dollar, also the spike here on risk off, also on the back of a weaker or a softer Bank of Canada comments and things. And now on the back of the dollar, we came back a bit higher oils as well. But we are on decent support, and this looks like technically relatively simple. On 136.5, 136.60. It's holding right now, and it could be as simple as that. Okay, mm, I might even be tempted to try it with a 30 or 40 pip stop, because this looks like relatively simple. I need to up this line a bit, but so yeah, and if you look at it in a simple way, take away this like massive risk off spike, we could actually start to reinforce this triangle again, perhaps, because the top end comes in at around the 138.5, which is that high before we had that risk off spike. Okay, so I think it is possible that this one holds here right now. Watch out tomorrow for those Canadian CPIs. Okay. We have to look at metals. All right. Okay, this is one I'm still in for a bit. People in the room, I've been updating them. I was like really hovering very close to the buy button when we were here, and then I just preferred to wait for it to get back above this line here. So I bought a few. I've been building off the position on the way up, as I usually do. I let a decent bit go into these prior highs here, and then we shot through over 25. I let another piece go just before. I'm smalls in now. I want to see how the week develops, but I want also to protect what I've got. It is very bullish. This is looking extremely bullish, but never say never. All right. So I don't know what's going to happen for the rest of the week. If you look at the yields side of thing, it is still looking relatively soft for the dollar. If I look at how the geopolitics go, it is still supportive for stuff like gold. All right. But a market is a market, and I would not be ruling anything out here. And we could be in for a bit of a rejection, and I will keep a close eye on what's going on around 80.85. If it goes back below 24.80.85, I think we may see a bit of a deeper correction. All right. So I'm protecting the rest of my longs here just below that level for your guide. Okay. All else equal, if we see a setback, I'll be looking at those setbacks and get pretty interested if, for instance, we get back to levels around, call them a little bit higher now. Yeah, well, low 24s for sure, low 24s, but already keeping an eye on what's happening in the 24.5 zone. Guys, anything else you want me to look at? Because I'm coming close to the end of the show. Oh no, there's one that I wanted to have a look at as well. Okay, Aussie went down very sharply with the risk-off move, but it's coming back now with the lower dollar move. 66.70, 67 the figure on the tight. Okay, 66.70, 67 the figure on the tight. But I am looking at this one as well, because this one is relatively interesting. And I said, like, this is really a risk pair, really pure and simple. And we had this big, huge spike on that risk-off move and on the Aussie move. But in the meantime, we are coming back down to where this channel was broken. We are trading around the 165, the figure, 164.70 zone. I think it's relatively important, because if we see a continuation of positive risk, I wouldn't be surprised that this continues to drift lower. Now, what I really would like to happen is that we see a bit of a spike higher again, perhaps towards 167, because this is one that I'm still. If we stay in a relatively positive risk environment, that is a Goldilocks scenario, soft landings everywhere, and the RBA remaining a bit on the hawkish side, with the European data remaining on the soft side, I don't see too much reasons for these two to really ramp higher. So I'm probably going to be looking for rallies to sell. Last one for the road. S&P high here, couldn't reach it there, just stopped around it there. We're trading pretty close. So this 55.70, 55.80, 55.90 on an S&P should be relatively important to start the week. Keep an eye on what's happening on yields. If we need to correct a bit, I wouldn't be surprised that we correct here a bit as well, down to 5,500. Will it go much lower? I don't think so before Jackson Hole. Okay, I think we're going to find deep buyers here. Just a case of making money work. All right. But keep a close eye on the yields, because I'm a little bit in between two seats for calling this a bit of an intermediate top and seeing a bit of correction. And that is it for me for today. Tomorrow we will be back full steam. Ryan will be back as well. And then we go as I said, full steam ahead for another round of flow shows. Thank you everybody for being here with me today, and we speak to each other tomorrow again. Cheers, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.